Here's something most people don't realize. You don't need thousands of dollars to start building passive income through dividend investing. In fact, according to Vanguard's investor research, the average investor waits until they have $5,000 to $10,000 saved before they start investing. But here's the problem with that strategy. Every month you wait costs you compound growth. If you invest just $100 today in a dividend ETF yielding 3% and add $100 every month, in 30 years, you'd have over $58,000. Wait 5 years to start, you'd have $41,000. That's a $17,000 difference from just waiting. I'm going to walk you through exactly how to buy your first dividend ETF for under $100. The same strategy I used to build passive income streams that now pay me every single month. And I'll be honest, when I first started, I thought ETFs were these complicated financial products only Wall Street insiders could access. I was wrong. This is a learnable skill, and by the end of this video, you'll know exactly what to do. Step 1. Understand what you're actually buying. Let's start with the basics in plain English. ETF stands for Exchange Traded Fund. Think of it like a basket that holds dozens or even hundreds of dividend-paying stocks. Instead of buying one company like Coca-Cola or Procter & Gamble individually, you're buying tiny slices of all of them at once. Why does this matter? 2 reasons. Diversification. If one company cuts its dividend, you're protected because you own 50+ others. Low cost of entry. You can own a portfolio that would normally cost thousands for under $100. Here's the part most beginners miss. Dividend ETFs automatically pay you cash, usually quarterly, just for holding them. That money hits your brokerage account, and you can either reinvest it or withdraw it. That's passive income. Step 2. Choose your ETF, the 3 beginner options. You don't need to analyze 1,000 ETFs. For under $100, here are the 3 I'd recommend. Option 1. VYM, Vanguard High Dividend Yield ETF. Current price, approximately $120 per share. Prices fluctuate, check current. Dividend yield, approximately 2.8%. What it holds? 400+ large US companies known for reliable dividends. Why I like it? Low expense ratio, 0.06%. Rock solid companies. Option 2, SCHD, Schwab US Dividend Equity ETF. Current price, approximately $80 per share. Dividend yield, approximately 3.5%. What it holds? 100 US companies with 10+ years of dividend growth. Why I like it? Higher yield, still diversified, focuses on dividend growth. Option 3, SCHY, Schwab International Dividend Equity ETF. Current price, approximately $25 per share. Dividend yield, approximately 4.5%. What it holds? International dividend stocks, Europe, Asia, etc. Why I like it? Cheaper entry, geographic diversification, higher yield. For your first purchase under $100, SCHD or SCHY give you the most flexibility. Step 3. Open a brokerage account. 5 minutes. You need a brokerage account to buy ETFs. Think of it like opening a bank account, but for investments. The 3 easiest platforms for beginners: Fidelity, no account minimums, 0 commissions, excellent research tools. Charles Schwab, fractional shares available, beginner-friendly interface Robinhood. Simple app, instant deposits, fractional investing. Here's what you'll need: your social security number or tax ID, bank account for linking basic personal info, address, employment. This takes about 5 minutes. Don't overthink it. All 3 are legitimate, regulated brokers. Step 4. Fund your account. Once your account is approved, usually instant, link your bank account. Most platforms let you transfer as little as $10 to start. For this example, let's say you're depositing $100. Pro tip: some brokers, like Robinhood and Webull, offer instant deposits up to $1,000, meaning you can start investing immediately instead of waiting 3 to 5 business days. If you're using Fidelity or Schwab, you might need to wait 1 to 3 days for the funds to settle. That's normal. Step 5. Place your first order. Here's where beginners freeze up. Don't. This is the easiest part. Step by step, search for the ETF ticker symbol, e.g., type SCHD in the search bar. Click Trade or Buy, choose Market Order. This means you'll buy at the current price. Enter your quantity. If SCHD is $80 and you have $100, you can buy 1 share. If your broker allows fractional shares, you can invest the full $100, review and confirm. That's it. You now own a dividend-paying ETF. Common mistake to avoid. Here's what I see new investors do. They buy their first ETF, get excited, check the price 10 times a day, and panic when it drops 2%. Listen carefully. Dividend investing is not day trading. The goal isn't to sell this in a week. The goal is to hold it long-term, years, not months. Collect the dividends every quarter. Reinvest those dividends to buy more shares. This is compound growth. A study by Fidelity found that the best performing accounts were owned by people who either forgot they had the account or were literally dead. Why? Because they didn't panic sell. Set up automatic dividend reinvestment, DRIP. Most brokers have a toggle for this. And let the system work. What happens next? Within the next 1 to 3 months, you'll receive your first dividend payment. It might only be 50 cents or $2, but here's what matters. You just created a passive income stream. Now here's the system I follow. Every month, add another $50 to $100 to your account. Buy more shares or fractional shares of the same ETF, reinvest dividends automatically. Don't check the price obsessively. Check quarterly when dividends hit. If you do this consistently, in 12 months, you could have 12 plus dividend payments working for you. In 10 years, you could be earning hundreds per month on autopilot. Closing. This isn't about getting rich overnight. It's about building a system where your money works for you, instead of just sitting in a savings account, earning 0.5%. You don't need $10,000 to start. You don't need to be a finance expert. You just need $100 in 10 minutes. Knowledge is power. You now know how to buy a dividend ETF. The question is, will you actually do it? If you found this helpful, hit subscribe. I break down money strategies like this every week. And if you want to learn how to scale this into a full dividend portfolio, I'll link the next video above.